And so I just wanted to start the conversation today by saying how thankful I am to them for allowing us to come out and meet with you all and present on this topic. I've read an article, I was telling some of you earlier, I read an article recently that was talking about how this model is going to continue to grow. And shout out to the founders of this, because it fills such a need for people who are really wanting to focus on growing their business, to not have to worry about things such as, mail, simple things you don't think about when you're starting your business. So thank you to them. It's great to be here. My name is Matt Boulay. I'm a benefits consultant at Gallagher out of Omaha. I work with employer groups of all sizes to help them create a benefits package that is tailored to the needs of their employees as well as to their larger business goals. Hello.
And hi all, my name is Zach Detmer. I'm also on the benefits team at Gallagher, located here in Omaha. I've been with the team for about 17 years now, and my focus in a variety of roles has always been small business. So Matt actually invited me along for the ride with Elevator. I work with the team here as well, and just looking to be a support to small businesses, because that's kind of my expertise.
He's being humble. He is the small business expert on the team. So we always go to him whenever we're engaged with a small business. Zach knows it like the back of his hand. He's been doing it for a while. So I'll brag for you, don't worry.
Thank you.
From an agenda standpoint, this is a conversation too. So I'm presenting, we're talking, but if you have questions, ask your question. If you want to make a comment, or have a story, please do. It's a conversation. From an agenda standpoint, we're going to talk about the history of benefits. So why they're such an important topic now, how we got to where we are currently. We're going to be talking about the types of employee benefits. So, what are standard offerings, what you should look for when you're starting to build out your employee benefits package. We're going to be talking about funding structures. So how is the benefits package that you're offering, the medical insurance, the dental insurance, life insurance, et cetera, how is it funded? There's various options. Zach will be touching on that, so he'll do a little bit better of a job explaining it. And then we'll talk about innovative considerations and compliance updates. So I feel like I'm sitting in a room full of innovators. From a standpoint of innovative considerations, one of the things we talk about a lot in the industry is that there's a lot of brokenness within it, whether that be on the healthcare side. And so one of the things that is going to contribute to the solution is innovative considerations, is thinking outside of the box and doing different things. And then compliance updates, you probably saw it on the last ballot. There's some new laws in Nebraska in terms of sick leave for companies that affect companies of all sizes now. And then we're going to be closing things up about talking about property and casualty needs. And so think about outside of benefits, outside of healthcare, the broader insurance needs of a company, which is fortunately much of which is taken care of for you all right now as being a part of Elevator. But if the day comes where you've scaled your business to the point where you need to get your own building or your own amenities, these will be considerations that you should talk about and have in your mind as you're going along that route. So the history of employee benefits, the Affordable Care Act. So in 2010, President Obama, one of his goals of his administration was to tackle the problem of healthcare. And the problem at the time, as it is still now, is the affordability portion of it. And so their administration came up with ideas in terms of how do we create it, make it more accessible and more affordable. Why this is important? Well, it's important for many reasons, but why this is important to you all as business owners, as entrepreneurs, is that it used to be that as a business, you didn't have to offer benefits to a degree. A lot of companies did because it's part of compensation and it's a way to attract and retain talent. And so when you're out competing for employees, one of the things you could do is offer them, a benefit that was going to attract them to your operation as opposed to your competitors. When the Affordable Care Act was officially enacted, it created a mandate that if you have over 50 employees, you have to offer a minimal set of, you have to offer a benefits package that meets the minimal, what's the terminology?
Value.
Minimum value, yeah. Minimum value. There's a threshold of this is the bare minimum of benefits you can offer. And every company over 50 employees has to do it. The reasoning, I think part of the reasoning behind that was that there's all sorts of ways to administer healthcare. There's obviously the public marketplace that the Affordable Care Act created that allows people who maybe aren't employed at a company that offers benefits or want to go and seek their own benefits or health insurance can go out on their own. That's administered by the government. But one of the things that the government and our representatives believed at the time, and I still believe to be true, is that the employer model is an effective way to deliver health care, to deliver benefits to the community, to individuals. And it's kind of evolved since then that we do studies for our clients all the time that shows their employees and communicates to their employees, hey, this is your base salary, but when you add in the benefits you have, this is what your total compensation looks like. And so it kind of got put into the world of benefits aren't just insurance, they're also a part of your compensation. Some key provisions of the Affordable Care Act, the history of it is that the individual mandate, so requiring most Americans to have health insurance or to pay a penalty, although that was eliminated in 2019. It established the online exchanges, which you'll hear a lot of people in the industry refer to as the marketplace, where individuals and small businesses can compare and purchase insurance plans. Medicaid expansion, so it expanded the Medicaid eligibility to cover more low-income individuals. This was made optional for states by a Supreme Court ruling, though, however, it's still enacted in many states. There's consumer protection, so it's prohibited insurance companies from denying coverage from people for pre-existing conditions. So if you are an employee, for example, and you lose your job, whether that be for layoffs or whatever the reason is, and you have a cancer diagnosis, it used to be that insurance carriers could turn you away because they're like, we don't want to take on that risk. Now they can't, because if you have a pre-existing condition, everybody, is entitled to a degree healthcare, and so we can't be turning away people because of something that's obviously not their fault. Essential health benefits, so what I was talking about, what Zach and I were talking about when we talk about meeting that minimum value, required insurance plans to cover a set of essential health benefits, including emergency services, maternity care, and prescription drugs. Then, like I had talked about, the employer mandate, so if you're over 50 employees, and then subsidies and tax credits. So the Affordable Care Act provided financial assistance to help low and middle income individuals and families afford insurance through the marketplaces via tax credits, subsidies, etc. Are there any questions on kind of the history of it?
Not on the history, but with regards to marketplace, and I don't know if it's too early to ask, but I'll just throw it out there and you tell me what to come up with. Is there something where smaller companies who are not offering group insurance can provide a subsidy, for lack of better terms, that's not the correct word, to employees to help offset their cost for them to go out in the marketplace? I know that there's a specific plan, there's a qualified plan.
Yeah.
Can you talk more about that?
Yep. Yeah, we're going to talk about kind of the basic health insurance programs. Beyond the basic health insurance programs, there's many creative ideas. One that has become legal to an extent is this ICHRA concept, I think, that you're referring to. It's defining a contribution. What can I as an employer do without having to increase my budgets year over year to help my employees out who realistically are probably acquiring coverage on their own? So we're going to talk a little bit about that concept today, how it's evolved, how it's become a little bit more accessible. I'll add to Matt's slide here that I think healthcare reform addressed a lot of kind of the negative stigmas in the world. He mentioned pre-existing conditions. When I had started, we were selling policies that had annual and lifetime limits. We sold $1 million policies. Those sorts of policies don't really exist today. There's unlimited coverage. There's a lot of positives that came out of it. But one of the real challenges still is affordability of healthcare. The cost of healthcare continuing to rise year over year, even in the last 15 years since the ACA was implemented. So there are solutions that a consultant can explore with you. But it really just depends. Is that going to be affordable versus the open marketplace or Medicare or TRICARE? There's a lot of places where individuals can seek coverage.
Thank you.
So one of the takeaways I think we're going to be referring to today is your ability to kind of work with consultants, especially as a small business, kind of really free of charge, to kind of explore any of these areas. We're going to hit on, again, some of the big ones that we think of, which are retirement and medical insurance, and the perception that these can be wildly kind of inaffordable and very challenging for our business to offer. While that may be accurate, employee benefits is such a broader term. There may be a number of areas that you can look to benefit your employees. Working downtown, you're going to see many, many examples. This is just scratching the surface, but something like commuter benefits or real perks. Mike Martin asked ways that I can maybe budget a couple $100s to help my employees out as an additional employee benefit. So it's not just medical insurance. There's many forms, many ways that either you can provide or your employees can purchase. There are voluntary benefits. So just to kind of walk through some of the vast examples of what we work on, Matt and I, day to day in the employee benefits world. Medical insurance, of course, highly regulated, not very many options. We work with Blue Cross Blue Shield, United Healthcare, some of the big companies. Beyond that, there's a good chunk of our clientele that don't offer medical insurance. They look for other ways, like Matt mentioned, to retain and recruit employees. Dental insurance, kind of walking through this, these are some of the more popular ones: dental, vision, life and disability coverage, right? There are a lot of tax-advantaged accounts that we can help set up for our employees. There's a concept called lifestyle spending accounts. I can maybe give my employees money for health insurance, yes, or maybe I can give my employees money to purchase other things for their life. That's a lifestyle account. Or flexible spending accounts. Maybe I can set aside tax-advantaged dollars to help pay for certain qualified medical expenses. So these are all real perks. What we use to craft those conversations is our client data. We've been talking a lot about data this morning. We utilize benchmarking, which is, from a competitive standpoint, comparing ourselves to what other businesses like us are doing. What I love to find in those studies is the trends, benefits that are just starting to gain more traction. Some other ones that you guys are going to see on the screen that we talk a lot about with our clients: mental health, employee assistance programs, ID theft and legal coverage. Obviously, those are becoming more and more important each day. We were talking in the networking session just about scams and all this stuff that we have to navigate online. So there are tools that we can help to better position our employees from that standpoint. Pet insurance. It's slowly growing into a benefit that's being offered, but it's one of the most desired benefits. It's one of the ones when we ask for feedback from our employees, what do they want to see? They can't afford to take their pets to the vet without spending $1,000. So how can we look to provide benefits to help employees out? So that's kind of the goal of this busy slide, is to show you there's many other ways that if you guys have some dollars to invest into your employees, a consultant can really help navigate that kind of conversation of what might be possible for you. Josh has a question.
What's like a best practice as far as, like, you look at this list and you're trying to figure out how many types of benefits I can offer to my employees? Could realistically a company have all of these benefits?
I think so. Sometimes, especially for small business, it becomes difficult to administer offering a number of benefits. You may not have the staffing. A lot of small employers, they don't have benefits and HR teams to help them keep track of it. But where the world's going, Josh, is towards technology. So a big part of what Matt and I do on a day-to-day basis is we're building technology platforms. We're not doing benefits presentations and handing out paperwork any longer. We're organizing the list of benefits online on behalf of our employer groups so that they can offer the benefits that are important to them. I'm a big proponent of not offering too many. We want to offer benefits that help our employees' paychecks at the end of the day. If you do it wrong, and if you don't educate properly, offering 20 benefits is just going to be perceived as more money coming out of my paycheck. So there's a thoughtful way to approach it. You know, you want to kind of just start with a conversation and what your goals are as a business over the next few years. And then, like I said, we're going to use data that I like to break down based on, you know, where am I working? What industry am I competing against? How many employees do I have? And then we kind of explore what benefits are most popular. If they went to work for the employer next door, what do they have that I don't have? And that's what we can help you kind of break down. Anything else on that page, Matt? Any other questions as far as benefit types? Okay, like I said, we're gonna talk about medical insurance a little bit. It's definitely the one that we know that we need to have at some extent. Like Matt said, we are working in an employer-provided, a group insurance market is the most common way for us to kind of achieve having medical insurance. By and large, there's kind of a spectrum of how we offer that insurance. To the least risky, we want to take on as little risk as possible, and we want to pay an insurance company. That's fully insured. We'll talk about that. Or we are a little more risk tolerant. We maybe have a little more capacity to manage a plan in-house and pay the claims of our employees. Obviously, there's a lot of factors to what is going to make sense for a particular business. One of the key ones or two is going to be the size of your company and the risk of your employees, the health claims. But fully insured, I would say, is probably about 50% of the clients that we manage, by and large. For small businesses, that's going to be a far greater number. Fully insured is a basic health insurance program where you pay a little bit of an elevated premium to the insurance company on a monthly basis so that the insurance company will assume 100% of the risk. They will pay every single claim, you know, with common limitations and underwriting. There are certain exclusions. We're not going to talk about those necessarily today, but they're gonna cover your claims with no limitations. If you have 0 claims during the year, the insurance company is going to keep those premiums. They're going to maintain those premiums on the block of business. If you have a member that does have a catastrophic claim, multi-million-dollar claim, the insurance company is also going to be responsible for that. So we pay a little bit of a higher premium in the fully insured arena so that the insurance company assumes all that risk. At the other end of the spectrum, and again, envision kind of larger employees, employer groups, number of employees, there's this concept called self-funding. So self-funding kind of flips that mindset, and it takes everyday predictable expenses and claims, doctor visits and prescriptions, and instead of paying a premium to the insurance company, the employer has enough cash set aside to view those as more budgetable expenses that they can manage on a month-to-month basis. In other words, they're going to pay those claims on the behalf of their employees. This helps cut a lot of the, you know, red tape, a lot of the costs for coverage, paying insurance companies. This can really help our employer groups lower their costs over time. But in reality, a true self-funded employer they're few and far between. Those are our huge jumbo corporations that might have enough cash flow to accomplish that. So what our insurance market looks like in the self-funded space is we project claims to an extent. Employers are paying a baseline of claims that may fluctuate month to month for their employees, and they are purchasing two things. They're purchasing stop loss insurance. So they are still purchasing insurance to cover catastrophic claims that exceed certain benefits. And they are purchasing the services of a third-party administrator, an administrator to help service and pay claims on their behalf. That's how we're piecing together our self-funded programs. So again, think larger employers, maybe less risk on the self-funded side. The third component is kind of right in the middle. These are level-funded health plans. These are very popular in the state of Nebraska. Right now in that small to mid-size employer range, this is a self-funded concept where we're working with an insurable product with a Blue Cross Blue Shield or a United Healthcare to predict our expenses over the next 12 months. And in return, that insurance company is going to ask us to maximum fund a level monthly payment of where our risk is at. And then from there, they're going to assume all the risk that comes above and beyond the agreeable insurance premium. So it's kind of a middle ground approach between fully insured and self-funded is this level funding. At Gallagher, probably 40 to 45% of Gallagher's clients are in that self-funded space. This level funded concept is, like I said, in that middle ground. It's 5 to 10% of our clients overall. Kind of a greater amount in the state of Nebraska, I would say. The companies like UHC and Blue Cross have really taken to these sorts of plan designs.
I would just add that, and that was great. This is a hard topic to cover because it's very intricate and detailed. I would add that one of the questions I know people start to ask themselves as they review these options is, well, how do I know which one for my business? And I would say that that's where the work that like a Gallagher, any of the other consultants in town will do is we'll kind of help you understand, well, hey, what's your risk? What's your demographic? What's your appetite for risk? And what do we want to take on? I will tell you, if you are a small business and you are below that 50 threshold, 9 out of 10 times they're going to fall in that fully insured category, and you probably should. There's stability there. The administration of it is a little bit easier, so it advantages you in that way. To Zach's point, if you're a larger self-funded group, there's the chance for better cost reduction. You have more flexibility in how you choose to administer your plan because at the end of the day, you are the fiduciary. You are the owner of the plan. And so you can kind of structure it in a way that meets your employees' need. One of the ways that you do that, and this is a far out there topic that we won't get into today, but you now, depending on your size, it's kind of the law of large numbers, but you can actually administer direct contracts with hospital facilities, with healthcare systems. So the insurance carriers all have their own contracts with different healthcare systems, and they have their own set of reimbursement rates, but perhaps that contract isn't what your employees need. And so self-funded allows you to take those types of things into consideration. And then level funded is, to similar to Zach's point, kind of that middle ground. And if you have a higher appetite for risk and you think you guys can beat the system in that year, then level funded potentially is the way to go. So there's all sorts of considerations that you really kind of need to do the due diligence of understanding your population and whatnot before you can make that decision. So, and data is king.
In the grocery business world, there's a thing similar to a co-op. Small grocers in small towns, they all band together so they can get purchasing power.
Mm-hmm.
Is there something similar that we can do for small businesses to leverage self-funded? Because reality, self-funded is the way, my experience. I went from a fully funded to self-funded in a large organization, and I saw the benefits of it. But I think that us small businesses cannot take advantage of that.
Yep.
So can we do something very similar to the small business grocers where we can, be grouped in together and take advantage and leverage self-funding?
Yeah, 100%. And I think as intimidating as that last slide may have been, just this idea that you can do some sort of feasibility analysis for your business with a consultant free of charge is kind of how you explore all those other avenues. And Martin, we weren't fully prepared to talk about some of those because even then, still not probably applicable to a lot of small businesses. We're going to talk about a couple. We're going to talk about PEO and some other options out there. But this concept where we can band together and purchase benefits as if we were a larger organization to spread across that risk, it's very prevalent. We manage all sorts of insurance consortiums and captives and associations. I think the key biggest hurdle is probably state regulations, state insurance departments. So a lot of those that we manage, are probably held within the state boundaries. We can't, feasibly spread those across too many states because then, we have all these different rules that we have to abide by. So the ones that we manage at Gallagher typically are within states. And then, I would say of the ones that we've started to bring together, there's got to be some sort of common draw. I don't know that small business is necessarily that common draw. There's got to be some sort of, we do business together, or maybe there's an association that we're paying dues to because we all have a common cause. We can successfully bring those together. Although there are some general ones out there in the market for nonprofits and for general business groups. But absolutely, those are all kind of options. Some are managed, like Matt said, by us, the broker consultants that are negotiating those contracts with hospitals, and other are managed by Blue Cross or Medica. They have a number for truckers, for accountants, for banks, for things of that nature, where absolutely that can help with your ability to purchase insurance if you're taking 5 employees and joining with 5,000.
I've seen that a lot more with like product liability insurance, but not so much with the health side.
Yep.
Mm-hmm.
That is something that you guys offer though.
Yeah, like we have, the big one we're talking about right now is like this pooled concept for our retirement programs. Mm-hmm. Medical is just so highly regulated that there's a lot more that you have to be careful with. But we've got a pooled product where groups of 2 employees are joining this pooled retirement program to avoid some of what we assume are enormous fees to enter those on a month-to-month basis. So yeah, those concepts are very prevalent nowadays.
I want to thank you for your question, Milton, because
I'm sorry, I keep calling you Martin.
No, you're fine.
Should have corrected me.
Well, that was me correcting you.
Okay,
I was just going to let it slide, though.
Very sorry.
No, and I know you well enough to know that you're kind of asking me a little bit of a leading question, too, because one of the things that Milton and I worked on together was stop loss. So when you go into a self-funded arrangement, people ask the question of, well, what about catastrophic claims? I'll tell you, for example, cancer claims, if you have individuals on the plan who have babies that are premature or that go to the NICU, these are expensive claims, but they're necessary. We're never going to tell somebody, I'm not going to cover your baby staying in a NICU, but what can I do as the fiduciary of my plan, as the owner of my business, to mitigate that risk? And what we do is we use something called stop loss coverage, which I'd be happy to talk to you guys about that if you're interested, but I'm not going to dive too deep because I think it'll stray from the general message too far. But essentially that allows you to plan for catastrophic events where you'll cover up to a certain amount of claims. Then afterwards, the catastrophic reinsurer will reimburse that amount back to the company. To Milton's point, as self-insurance has been scaled down so that groups that maybe aren't 10,000 employees can take advantage of that, they've been able to enact what we call captive solutions, where you're putting together employers in a captive and they're all collectively purchasing stop loss. Again, the rule there is kind of the law of large numbers, right? So the more companies, the more employees, the more entities, we can spread that risk. And so everybody's premium is kind of supporting each other. And that's one way that it's been scaled down to, what we would say is the middle market. So groups above 100 lives. Again, depends on your risk and your demographic. I wouldn't say every group at 100 should go to self-funded. It just depends. So
this is kind of what Milton was talking about earlier, guys. We wanted to Like I just said, there's a number of different ways we can purchase health insurance, but we wanted to talk about two kind of real viable solutions for small business that aren't always in a position to offer health insurance. This recent enactment, I think the last time Donald Trump was in office, came about to expand the accessibility of these individual coverage HRAs, health reimbursement arrangements. So this is a legal concept now that we can set aside tax advantage dollars. So that's one reason, one incentive for you guys to consider this for both ourselves as the employer and our employees to purchase coverage on their own. So it's not necessarily a group insurance purchase. These are products that members, employees can pick between a number of options, the plan that works best for their families, and should they leave employment, they can essentially take those plans with them. While this is a very, very cool concept, I think at the top of that list is if I'm an employer, my ability to set my budget. Let's say I've looked at this, I have 4 employees, and I know I would like to offer $200 a month. That's my budget per employee to go purchase coverage. This offers me a mechanism, a vehicle to allow my employees to do that on a tax advantage basis. Very, very cool concept. We've even got Blue Cross Blue Shield. They've got a portal that they've developed called Personal Blue, where employees can go out and shop dozens of different plans, networks, things that may be valuable to their families. One of the key problems that I keep highlighting is just the cost of healthcare. Is that an affordable approach, even after the employer contribution, for me as an employee to purchase a valuable health plan? Maybe, maybe not. I think you guys may have friends, you may have coworkers, you may have employees that are purchasing coverage on the individual marketplace. I think 90% of people that buy coverage on the open marketplace, they don't have access to any form of employer contribution, and they're getting subsidized healthcare coverage. We don't want to disrupt that as a small business owner. That's something that's working great for a huge subset of our employees. We want them to continue to do that. They're paying a fraction of the dollar for that coverage, for pretty darn good coverage, because it's subsidized by the Affordable Care Act. But what these ICHRAs do is kind of stack on top of that. If you start to hear of, I don't want to disrupt the individual marketplace for my employees, but I do have a couple employees that continue to ask me whether I'm recruiting them or that they're here, that health insurance is quite, unaffordable and you would like to help them out. The ICHRAs allow for your population to waive that ICHRA contribution and to remain on the open marketplace. And if you have just a couple employees, you can set up a plan here to allow them to take advantage of some employer dollars, purchase a slightly lower health insurance plan on their own. So that's the ICHRA concept. There's a little bit to all these plans, a little bit more kind of plan document and IRS requirements that we need to get set up to manage these plans. But like I said, some of our insurance companies have nice portals to allow us to explore what plans may look like. One more that we wanted to talk about is called a PEO, if you've ever heard that term. PEOs have some of the most affordable employee benefits plans out there. Reason being is because what a PEO, a professional employer organization, is granting you is all of the tools to help you manage your people, to kind of offload some of those responsibilities so you can focus on your business, growing your business, and doing what you do best. The PEOs are going to come in and help with employee benefits at a discounted rate. They're going to help with retirement and workers' compensation, compliance, tax filings, HR, all of those people things that you can think of. That's where a PEO comes in. Some of the world's largest PEOs, they're grown from a technology, and a lot of those technologies are payroll companies. So that's kind of one of the only there's a couple catches, of course, to all of these products. One of the bigger ones is, am I finding these services valuable for my employees? Do I actually have the need to bring on a payroll software to help manage that duty? Because inside of a PEO, you're going to be paying for that technology and that payroll software once that becomes valuable to you, so you can have access to discounted employee benefits. So that's the concept. Your consultant or Gallagher, we have PEO specialists that can help. Again, I mentioned this term, feasibility analysis. We can help kind of see free of charge if this sort of thing is right for you. But this could be something that could help you scale and grow your business and help out with that people concept.
One thing I want to add to the PEO portion, much to Zach's point, to the feasibility aspect, when you get to the point in the equation where you're like, I know I want to use a PEO, then the question becomes, well, which PEO is right for me? And that's where a lot of the analysis work that our PEO team does comes in, because each PEO is a little bit different. You know, you've heard of ADP, Workday, I think, is a software, HRIS software, excuse me. Rippling is another PEO. There's a new one here in Omaha called Pando PEO, which I know the gentleman over there, I hear good things.
Yeah, Pando has a Blue Cross, like Blue Cross has some PEO products with Pando and Alliance Group and some others. Yep.
But the question that employers ask themselves at a certain point is, you know, do I really want to be in that co-employment arrangement with the PEO? Have I gotten to the point where, you know, I can maybe hire individuals to work within these softwares and I don't need the PEO? Again, it's a case-by-case basis depending on what you're going up against and what you want and what you value. One of the downsides, I would say, of a PEO, and I'm not sure how it works at all of them, but I know some of the ones that I've worked with, they only can work with certain carriers. So when you're going out to do a market evaluation of different insurance carriers and you do it via your professional employment arrangement, you may not get a full market analysis. Still, you know, relatively affordable, easily administered, but once you get to that point where, you know, the cost of medical insurance is more for your business than the administrative ease of the PEO, that's when employers start to ask themselves that question. But a very useful model, depending, again, on the context of the situation.
Yeah, I don't know what size of businesses you guys have, but I kind of look at it this way. I'm growing to about 10 to 15 employees, and I'm at the point where I might need to start hiring that office manager, that HR manager, someone to help me with the people. Insert a PEO to start to think about helping us with that staff. And then you grow, their sweet spot is probably that up to 70 some employees where, okay, now I know we have too many employees here locally that I'm gonna have to have an in-person presence to help me manage that. PEOs can be valuable for any size employer, really, but I would say that's kind of the sweet spot.
There's always a break-even spot for a lot of this type of stuff. You know, when does it work?
Yep.
What point does it make sense to change to a different model? Because it's always shifting. So compliance updates, things that have kind of happened over the course of the past, over a decade now since the Affordable Care Act, as well as one that has happened last year, more specifically to Nebraska. I'm gonna do my best to cover this. I'm not an attorney, so I'm not a legal eagle. I don't do all of the talks. I don't necessarily know all of the correct terminology, but in Nebraska last year on the ballot, there was an initiative called 436. Nebraska was one of the few states that didn't necessarily have a mandated sick leave law. What this initiative did, and it passed with resounding results, by the way, a lot of people wanted it, is that if you have more than 20 employees, if you are in the state of Nebraska, you must provide 56 hours or 7 days of paid sick leave. If you have 20 employees or less, you have to offer 40 hours, 5 days of paid sick leave. They've kind of scaled it to make it more manageable for those companies because there is a cost associated with it. But that's something that as a small business, everybody needs to be aware of because that aspect is changing. I think it's kind of still being bounced around in terms of how is this going to apply? You know, when is the actual date that it needs to be enacted by? So if you're working with anybody, talk to them about it and ask those questions. And obviously Zach and I can help you plan for that as well. One of the biggest ones and one of the most, I think, innovative and profound ones is this Mental Health Parity and Addiction Equity Act. The stigma around mental health has been changing. I was a psychology major in college, so I spent a lot of time studying, various mental health ailments, and then, how do you go about finding treatment, etc. And it's hard. And with the stigma around it, it wasn't always perceived as a medical issue, but I can tell you a lot of it is a medical issue for many reasons. There's a lot of correlation in data that shows that your mental health and your physical health are directly correlated. So the healthier you are mentally, the healthier you will be physically. The reason behind that, we always used to say when we were studying in college, correlation does not mean causation, but what I will say is from my experience is that people who, take care of themselves mentally tend to make better decisions for their health. There's that correlation. Whatever the case may be, obviously if you have something along the lines of like schizophrenia, it's hard to make any kind of decision, right? Or other disassociation disorders too. And so there's that direct correlation. And so with the mental health parity, what the government did is they said we're increasing enforcement because you all need to cover mental health and substance use disorders and have it be no more restrictive than medical and surgical benefits. When it was first enacted, it was a lot of gray area in terms of how does this apply, what can we and can we not cover, etc. And I would say that more recently they've kind of put the teeth into it. So you have the IRS going around and flagging claims from the past. There was a group that, before they were my client, something had happened where they had excluded, just by circumstance, I don't think they understood their policy, ABA therapy, which is a therapy for those on the autism spectrum. And they had excluded it during a time where this was enacted, and they didn't catch it, and they got fined by the IRS. And what the IRS will do is they'll come in and they'll say, hey, you either pay this fine or we're going to audit you. 9.9 out of 10 people are going to pay that fine. Audits are a hassle. Transparency and coverage rule. That's one of the hardest things in this industry is transparency. They're not always forthright with costs, whether that be on the facility side, whether that be on the carrier side, or whatever the case may be. So this rule requires health plans to disclose pricing information, including the negotiated rates with in-network providers, and then historical payments to out-of-network providers. Everybody needs to ensure that their plans comply with that aspect and with all of these aspects. That's one of probably the biggest things that we see in terms of risk for administering an employee plan is that the compliance is very difficult. If you want to talk compliance, we have teams internally that can kind of do a compliance audit, but I would also, find your own counsel. There's a lot of great lawyers at Coley Jessen and QTAC Rock who I know personally that do really good work for their clients. And so I'd be happy to connect anybody if you need to chat with an individual. The No Surprises Act, it's effective in 2022, and this act protects individuals from surprise medical bills for emergency services and certain non-emergency services. Where this really applies is if you are self-funded and using what we call a reference-based pricing model. Won't get too into that, but with that model, there is the potential for something we call a balance bill where sometime down the line after your procedure or after the emergency event, the hospital or the facility will send the individual a bill and say, you owe us $10,000 more. What the government is saying is that we can't do that anymore if it's an emergency service or a certain type of service, because if you need it, perhaps you can't afford it, but you still need it. So we need to protect the individual and the consumer in that sense. State-specific paid leave laws. So a lot of states have different leave laws. I will tell you, as you grow and scale your business, if you have employees in California, Oregon, Colorado, there are very different laws there. So you'll want to engage with an attorney or your consultant and put together some sort of a plan to be able to follow those laws in each state. Retirement plan changes. So the Secure Act and subsequent legislation have introduced to retirement plans such as increase access to multiple employer plans. So kind of what Zach was talking about earlier when Milton asked his question about pooling, these types of solutions are becoming more prevalent. These multiple employer solutions. COVID-19 related benefits adjustments. There were temporary provisions related to COVID-19, such as the extended deadlines for COBRA elections, so the Consolidated Omnibus Budget Reconciliation Act. We love our acronyms in this industry, so we just throw them out. This act, COBRA, essentially helps the employees who may have lost their employment for whatever reason continue to have health insurance, and so that the way they can be covered during that gap in between that job and their next job. That's put in a very simple way, but the COVID-19 adjustments allowed for those elections and premium payments to be extended, for those deadlines to be extended. And then telehealth and remote work benefits, similar to state leave laws. There's different laws in each state. There's also different federal laws. As telehealth and remote work benefits are becoming much more prevalent, the compliance around them, they're going to really have to start to engage and create compliance around it. And so what that means to you all is that things are going to change, and you need to know what compliance is coming down the pipeline. What are they going to enact that says, I have to administer it in this way or cover this aspect? And since it's such a new concept, they've just kind of started diving into it.
Hey, Matt, I want to expand on two of those real quick.
Sure.
So I'm not sure what all health plans you all are enrolled in, but this mental health one as well. So that's a very challenging area for us. There's some pending legislation out there that is going to mandate higher reimbursement points. The problem in the industry is, as you look at in-network providers, you're going to find a lot of the hospitals in your networks. You're going to see a lot of holes in the network access for, therapists, mental health practitioners. And that's because there's a current disconnect between where those contracted rates are with the insurance companies. They're just not signing those contracts. They're starting to charge more. So the mandating higher reimbursement points, hopefully that's coming here in 2025 to get more of those providers back in the network. So that's a positive that's being worked on. Another positive I wanted to talk about was the Secure Act. A really cool kind of feature of this, as you guys are looking to jump into one of these plans with your employees, is the accessibility to startup tax credits. So again, we assume all of these things are costly, cost prohibitive. We don't even want to engage in the conversation. There are startup tax credits now available to getting a retirement plan up and running that are very beneficial to small business.
I have a question. On the first one, on the sick leave, so it's a two-part. One, is it front-loaded or can it accrue? And two, does it have to be immediately available, or like some other benefits, you can allow for a waiting period?
Those are good questions.
Yeah, I'm not sure.
I'm not
You're
sure
talking about
about
like a parent could wait
No, so
to
like
take the
you know,
for
like big PTO,
Mhm.
right, or any other benefits. Company can tell you many days before you're eligible, right? So you can accrue you can
Gotcha.
start accruing
Okay.
PTO,
Yeah.
but you can't use it until after 90 days,
Mhm.
right? So that's the second question I asked. The first part is, do I need to front load those 5 days or 7 days, or are they accrued over a period of time until you build up to those number of days?
Mhm.
Because I can see the negative of it is all of a sudden, I start working for a small company.
Yeah, you hire them right away. Yeah.
Mhm.
I want to take 5 days off. I'm calling it sick because I haven't accrued my vacation, and now this is being used and abused.
I'll tell you what I tell my clients. I don't know, but I'll find the answer.
Or seek a lawyer, right?
Right, or
Yeah.
talk to your lawyer.
It's
What
just
I
one of
will
those
say is I
things
think a
you
lot
have
of
to
the
think
points you're bringing up are one of the reasons that it was kind of hard initially to get that enacted. It was a lot of those questions. And I think those types of inquiries are still kind of what they're figuring out. Law passed, how does it actually apply? So I don't know, but I'll find out.
So the law's been passed.
The initiative, the 436, was passed. I'm sure that the law is still probably going back and forth in the courts in terms of final language and whatnot, but the initiative passed, I think, by like 70%. 70% of people voted yes. So I'll go through this real quick. These are property and casualty considerations. Zach and I are not property and casualty consultants, but we do work with a lot of property and casualty consultants, so happy to connect anybody to a consultant so they can help you work through some of these inquiries as well. But But as you're growing your business and scaling your business, some things to be aware of are property damage. You can get insurance for damage to physical assets, such as the buildings, the equipment, the inventory. I think you guys have some sort of property damage probably administered, or general liability administered to you via Elevator Co. as part of your rent agreement. Liability risks, so legal liability for injuries or damages caused to third parties, including customers, clients, and to the general public. Those are policies that you can also get. Business interruption, so think about supply chain disruptions, loss of income due to a temporary halt in operations caused by a covered event, such as a fire or natural disaster. You can enact insurance or you can purchase insurance to help cover those as well. Cybersecurity threats, that's one of the ones that is becoming vastly more prominent. There's cybersecurity threats. You see probably hacks and data stealing on the news probably every other week. Data breaches, cyber attacks, and other cybersecurity incidents that can lead to financial loss and reputational damage. You can cover that as well. Professional liability, workers' compensation. So if you get injured on the job, or if one of your employees gets injured on the job, the solution is workers' compensation to, make sure that they're able to have some sort of income or, continue in their job functionality once they're done. Commercial auto, so if you are working in a business that has like a fleet of trucks or vans or whatever the case is, or if you have a automobile that is necessary to the business function, so think like daycares and they have vans sometimes, you can get policies administered via your company or covered by the company to cover those assets. Legal and regulatory compliance, so just like with benefits, there is legal and regulatory compliance around property and casualty. So fines, penalties, or legal action resulting from non-compliance with industry regulations and laws, and then natural disasters as well, such as floods, earthquakes, or hurricanes that can cause significant damage. I will say, shameless plug, I think natural disasters is probably one of the big things that you're seeing a lot right now with the fires in California, and you're hearing the horror stories of people aren't actually covered. That's why it's important to engage with a trusted professional to make sure that your policy is buttoned up in all the right ways. So in case something happens, the carriers can't get out of it. Takeaways. So the Elevator team told me that some of the better talks they've had here always have good takeaways. So I will say, as business owners, as entrepreneurs, one is assess your risk and your appetite for it. So what Zach had talked about, what is our current demographic? What is our risk? One thing I talk to employers about is that, hey, you have a lot of single young men on your plan. Typically speaking, they won't engage or go to the doctor until they need to. And then at that point, the cost is probably too late. Or we have a complete demographic. We have a young female demographic in that childbearing years, ages 24, 25, 26, 27 and up. Should we consider some kind of a maternity benefit or some kind of a maternity vendor? There's all sorts of vendors now that are offering help to employees who want to take part in IVF. So taking those kind of things into consideration, assessing your risk, and then also understanding your appetite for it. Do I want to get risky? Do I think I can beat the system with our claims? Do I think we'll have low claims and that I can be self-funded and collect that money back to my business? Or from a budget standpoint, do I need to just have a set amount and no risk? Similar to that, know your demographics. So like I had talked about, who, age-wise, gender-wise, race-wise, ethnicity-wise, all of the things. Know your demographic, because healthcare is different for each individual and we each have different things that we're dealing with. Communicate to employees. One of the things we talk about in this industry all the time, and you're seeing it on the news, is that much of the system, much of the healthcare and insurance, there are aspects of it that are broken. And we talk about, well, what is the answer? We need to solve for this healthcare equation. I'm never going to be able to solve for it. Zach might. He's pretty smart. But some of the smartest people in our country have tried to solve for it, like Warren Buffett, and they can't figure it out. What I will tell you is that the more you know, the more you can advocate for yourself, the better off you're going to be. So what that means for you as an employer is that one of the ways we talk to our customers about decreasing costs is making sure your employees understand their benefits. Communicate to them, help them know where to go and how to get there. One of the things we talk about all the time is the emergency room. Never would discourage somebody from going to the ER for an emergency, but a lot of us just think the ER is, where you go when something happens all of a sudden. Go to an urgent care. You're going to save yourself and the company a lot of money. that is if it's not an emergency. I want to make that very clear. Like I said, become your own advocate. Ask questions. Ask questions. There's no such thing as a stupid question. I think we all get very intimidated when we're talking to doctors because they're very smart. But ask questions. Ask questions about how would that get billed. It's yours to know, so ask the questions. And then engage with industry professionals. Shameless plug. Obviously, Zach and I will help anybody through these conversations at any point in time. We brought some of our cards. If you want to engage with us, you can connect with us on LinkedIn as well. But the professionals are there for a reason. There's a way that you can play in the system and you can make the system work for you. It's a large part of finding somebody you trust because you got to know what's going on. But we're here for a reason because it is complex. There's ways to navigate it. And so you need to engage with professionals when you're getting that aspect of your business up and running. Are there any final questions? I know we're coming up on time here. Are there any final questions? Comments? Well, again, I wanted to thank Elevator. This is awesome. What a cool community. Thank you all for coming out. Shameless plug, because I do see we have a couple of girls in the room. I was at the Women in Business and Insurance Conference this morning, and they're always looking to add new members. It's a huge conference, so if you would like to learn more about that, let me know. My mentor is the one who started it. This is your part.
Yeah, that's me.
Okay.
My turn.
Yes.
All right, so thank you guys.
Yeah.
These are both actually for you.
Oh, thank you.
Hand out your cards.
Awesome. We appreciate it.
So very much. Also, thank you to our sponsor, NEF, for providing business development services and funding. They're also a sponsor. Be sure to check out our future events here. We have Small Business Made Simple with Dundee Bank coming up on the 19th, and then a really fun e-commerce and friends on April 24th. And also, if you haven't, which I think everyone in this room has been to Elevator and knows that we're a magical place to grow your small business, be sure to stop by and talk to Josh.
Thank you. Thanks, guys.